afternoon, good evening. You are watching the Paris Fintech Forum Communities video interview series. I'm Elliott Gotkine, and today I'm joined by the CEO of Caisse UK. Kuba Fast, great to have you with us.
Great to be here. Thank you so much.
Okay, so before we get cracking, we're going to learn a little bit more about Caisse UK. So, Kuba, you're obviously part of America's biggest and most profitable bank, JP Morgan. Your UK operations somewhat newer, although I know you've been in Europe for as JP Morgan for more than 200 years. Tell us a bit more about your operations on this side of the pond.
So Caisse launched in the UK 3 years ago now. Our third anniversary was on September 21st as a greenfield digital bank targeting the UK population broadly. It's been 3 years now. We've had a pretty decent run. We're at 2.5 million customers right now, over 20 billion pounds in balances, and we keep growing. Voted best British bank 2 years in a row. Great traction so far.
Right, and I think you're bigger even than perhaps more established, I use the term advisedly, digital banks in the UK like Monzo and Starling when it comes to deposits. How do you differentiate yourself in such a competitive and crowded market, taking on and even surpassing some of those digital banks, as I say, which have been around for longer in this country?
Obviously, we do everything we can. It's a very competitive and demanding market. Look, we've built Caisse. There's a whole bunch of retail bankers here who've been doing this in one shape or form for a long time, and for many of us, building Caisse was building kind of the bank we would dream to build, right? With all the years of our individual experience behind it. And I don't think there's a single, piece of flavor to the secret sauce, right? It's really getting everything we can as right as we can. Right? So Caisse has started under this premise that, look, we're going to offer absolutely fantastic, frictionless digital experience to our customers. We're going to provide real human 24/7, very high quality customer service. And we're going to offer a very good deal to customers. All that within the framing of a very robust, trusted, stable institution that obviously also matters to customers a lot, right? And that really was the formula, and seems to have worked so far. And we've been quite fortunate that it does resonate with customers.
And I know that one of your early forays kind of into the UK, I think, was the purchase of Nutmeg, the wealth manager. What other plans does Caisse UK have for building out the UK bank, for building out Caisse UK in the country? More acquisitions, perhaps?
We aim to be, in the long term, we aim to be a universal, sizable bank in the UK, a bank that can address the breadth of the needs of the typical customers. And that means that there's quite a long way ahead of us in terms of build out of products, capabilities, and so on. Whenever we're building something new, as we did with investments, we take a look whether it makes more sense to build it in-house or whether it makes more sense to try to acquire a capability and integrate it. We don't have any particular explicit plans, right? These things get considered as we go. So yes, maybe if something comes up that's where this makes sense, we could acquire. But also we're very much ready to grow organically and build things out organically.
Okay, so we've heard about Caisse UK. Let's now learn more about Kuba. So, Kuba, you began, I think, your career in software at Novell before moving into consulting and then digital banking in your native Poland and then London. Was fintech always going to be your calling? Is it kind of just the way that the industry goes, kind of a perfect fit with your personality and your makeup?
No, nowhere near, right? And by the way, I did start as a consultant, so Novell was a bit of a short stint. My calling has always been to be an academic, actually, right? So I was doing computational linguistics and LLMs and stuff like that before they were en vogue. So 2005, back in the day, and I always my vision was always that's what I'm going to do. I'm going to sit somewhere in a well sheltered room and do my coding and do my thinking and so on and so on. Life intervened, and effectively, really by accident, I ended up in consulting. And there, after a few months, I realized, look, I learned more in those few months that I learned for the past, whatever it is, 2 or 3 years of my academic career. So that's why I stayed. And Novell really was a bit of a detour. I was an early sort of fan of open source and running a Linux distribution at home in the late 90s and all of that. And Novell at that point was the owner of SUSE Linux, had a lot of the Linux personalities in there. So it was a bit of a personal interest. I did an internship there, and that was that. And then in consulting, the way I landed in finance was also quite accidental. I did my MBA during the financial crisis, and at that point, all of the finance classes were undersubscribed, right? So you had the thing where everybody in the MBA went for the finance classes before because they were the most kind of in demand. And then the crisis happened, folks started thinking, well, maybe banking and so on is not the most interesting area. So I did a lot of that. And I deeply, deeply appreciated the mathematical intricacy, the conceptual intricacy and all that. So I said, oh, yeah, why don't I sort of steer my consulting career towards finance, which I did. And then I realized, actually, banking, fintech, finance doesn't have much to do with the academic finance part, right? And has a lot more to do about creating fantastic customer experiences, and managing your brand, managing customer economics, and so on and so on. And turned out I like that. So that's where I stuck.
Fascinating. And one imagines you've got your hands pretty full building out a digital consumer bank in the UK. When you have time, what do you get up to outside of Chase UK?
It's a different flavor every time. If there is anything I'm good at, I think it's learning. So I tend to steer towards activities that expose me to a lot of learning, right? So most recently, I've been actually looking into watchmaking of all things, and spent some time in Switzerland putting together a watch for myself, from like the tiniest screw all the way to the ready watch. By the way, I'm wearing a French watch right now, so that's a little nod to the Paris Fintech Forum. And before actually it was chess. So I never enjoyed chess, and suddenly I was like, hey, that thing is interesting. There was this wave during the pandemic when everybody took on chess. So I got completely immersed. I went to some tournaments at some point, and in my first tournament, in the first game, I got beaten by a 10-year-old girl so badly that even the arbiter stopped by to say, well, no, you should have done this, which like never happens. So I'm officially FIDE ranked at a very, very, very low level. So don't even look it up. And that was the thing at that point, right? So these are the kinds of things I get immersed with, and who knows what it's going to be next year.
Sounds like we should set up a match between you and Tamaz over at Raisin. I think he's
Tamaz is going to beat me for sure if I can tell. Georgia is very, very good at women's chess, so maybe that's my shot. But no, knowing Tamaz, I'm sure I don't have a starting position there.
Okay, all right. So look, Kuba, a key part of this interview is to get your take on the future of finance. But first, we're going to take a very quick break, after which we're going to continue our conversation with the CEO of Chase UK, Kuba Fast. Welcome back, and don't forget, if you're not already a full member of our community, everything you need to join can be found at www.parisfintechforum.com. And now, Kuba, let's talk about the future of finance. Fintech in general seems to be still a little bit subdued in terms of valuations and IPOs and the like, but we have still seen some mega fundraising rounds, especially when it comes to digital banks, Revolut being a case in point. With rates now declining, is Fintech back? Can we say that?
Look, I mean, I tend to have a bit maybe of a simplistic view, which is if you have good use case and you have a competitive product, a competitive, a need that customers are not meeting right now, you'll have runway, right? So I think that with the buildup of all the surrounding infrastructure, all of the, let's say, ecosystem that enables the creation of products and services that is substantially easier than it used to be a while back, I think absolutely fintech is here to stay. Now, I cannot really comment on the ups and downs of the valuation cycles, funding availability, right? I think there's folks who are a lot better positioned to do that. I at the end of the day, I'm in retail, so I'm interested in, are people coming up with interesting niches to play in? Are people coming up with compelling experiences? Are people finding traction in new and different ways? Which of course happens a lot. So that's always, regardless again of the abundance of funding or lack thereof, right? So it's always a pleasure to watch all the, let's say, inventiveness and developments in that space, and in some shape or form, there's a lot of room to keep innovating and keep thinking how to do a better job for customers.
But if there is a kind of expectations that maybe valuations are going to start surging again if rates continue to decline, for example, should we expect to see more mergers and acquisitions in the fintech space?
It's really tough for me to comment, right? You could always argue that it goes both ways, right? So if valuations go down and effectively funding becomes difficult, then at that point you have a lot of entities that have a harder time continuing and may look for a strategic sale as a way to sort of resolve the tougher situation they're in. On the flip side, again, as you say, if valuations go up, there is always the opportunity then to look that more inflow of capital and more opportunities for M&A. Again, I would have a hard time speculating. Look, again, I'm in the business of serving customers, not buying companies, but I'm a sort of avid spectator for sure.
Okay, and of course, serving customers now may now or certainly in the future involve more artificial intelligence, something you said you were toying around with way before it became du jour. It's gotten everyone excited over the past couple of years, especially generative AI. Your parent company, JP Morgan, spends billions, vast amounts of money investing in technology, more than most tech companies. How optimistic are you about the potential for artificial intelligence in consumer banking?
Yeah, I think long term, much like with physical footprint and all the other things, if you take a sufficiently long term perspective, there's got to be a tremendous impact. And of course, the key question is, in the next 3-5 years, right? How much of that is going to materialize? How much of that is going to not materialize, and so on. And my hunch is, as these things go, right, the let's say there's probably a degree of over exuberance at this stage versus we all get very inspired by the prospects of the technology, while maybe not quite sensitive yet to the capabilities of the technology in the near term, right? And if I look at the central case for especially generative AI, which is around effectively provision of customer service that takes out a lot of the human cost in the middle, I think that we are still fairly far away from that. If you look at it with an expectation of upholding the high standard that, as a regulated institution focused on conduct and so on, you need to maintain, right? I'm sure all of the AI folks are sick and tired of hearing about hallucinating and so on and so on. But this is a very material problem from a conduct point of view, right? I can't have a situation if that the bot basically says something that to the customer that's wrong. Now you may say, well, but people make mistakes too, and you can sort of demonstrate that in aggregate. Let's say a bot makes fewer mistakes. The big challenge there, though, is bots will make systematic mistakes, right? It's sort of the same mistake over and over again, and that poses quite a big and different, let's say, risk surface and risk exposure to the institution. So my broad stance is that of, let's say, cautious optimism with a very, very high degree of, let's say, engaged, thoughtful, critical sort of scrutiny of what is possible and what isn't possible, right? So for sure, what folks really deeply need to do right now, right, is make sure they really do understand that, make sure that they understand the limitations of the technology, and as leaders, as managers, like, really be very sober about what does it do, what risk does it create for me, right, and how to deploy these things. And again, I mean, I was recently in conversation with one of the sort of industry peers who talked about some proof of concept experiments they've made with effectively Gen AI chatbots. And the interesting part is they compared this versus a traditional expert-driven kind of scenario-based chatbot. And what they said, look, is that Gen AI chatbot was way faster to build and deploy into production. But then, and as a matter of like, whatever, 2 years versus 2 months kind of thing, right? But then going through all the risk management, compliance, conduct concerns, and it's not bureaucracy, it's actual concerns, right? Took them just as much as it took them to build the other one, right? So, and by the way, the other one, they can deploy at scale. The LLM one, there's still a whole bunch of thinking and control and kind of how do I scale this up, right? So it's going to take time. That being said, as JP Morgan and as Chase, we invest a tremendous amount of effort, work, thought, scrutiny into this. We have leading AI researchers that we were lucky enough to convince to join us at some point, and there is again a massive amount of thought and investment going into this that will materialize. And by the way, it's already materializing in some areas, and will materialize more and more in the future.
And that thought and investment, a bank the size of JP Morgan, or a part of the bank the size of JP Morgan, clearly has far deeper pockets and more resources to do that in the best, most efficient and most effective way possible. Do big banks now have an advantage over these standalone digital banks whose pockets may be reasonably deep or relatively deep, but are not as deep as the biggest bank in North America?
Maybe. I don't know, right? We know that from the point of view of like the basic foundational layers of AI. So for example, again, LLMs, scale and size seems to be a big advantage, right? In the sense that the availability of large-scale data sets, availability of big computing power, right, do make a huge difference. And in many ways, if you talk to folks who've been at the forefront of this in the big technology firms, they would say, at least in let's say the few that I spoke to, they would say it's all about who has access to better data. But that's foundational capabilities, right? I think there's still the question of, can you just buy that at some point, right? Like if you take some of those, again, big tech companies that would do all that investment, right? I think there is a plausible scenario where you say, it's the foundational capabilities that you buy. And for the use cases that you have that are common, like, again, for example, customer service or anti-fraud, maybe like some of these things that that have scale in application that every institution sees, perhaps you don't need a whole lot of bespoke kind of secret sauce in-house development, which would then say, much like you buy I don't know, cloud capacity today, you end up buying AI capacity, and you'll be fine on those fronts. There are bound to be cases that are very bespoke, right? There are bound to be cases that are, let's say, intricate, specific to a business, specific to data sets that the business generates. In which case, if you take the thesis that access to a broad set of data is what determines advantage, then it's got to be institutions with a broader footprint, with a broader scope, have a data advantage. And to your point, of course, just by sheer scalability of each use case, they will have more access to funding to drive some of the foundational pioneering stuff, right? That being said, that is true of any other, let's say, fixed cost deployment in a way, right? So if you take an institution that's, I don't know, building their digital platform, of course, if you're a bank with 80 million customers, you'll have a lot more funds to deploy to that than an institution that operates with 500,000 customers in that same market. And traditionally, I think we've always seen banking as a sort of business that has a synergy of both scale and scope, efficiencies of both scale and scope. So that I think applies in a very similar way.
Okay, Kuba, we're running out of time for this section, so I'm just going to ask you if you can give me just a 2 or 3 word answer to this. But any concern that big tech, do these developments in AI, for example, mean that big tech is going to be able to get more of a more sway in finance? Kind of yes or no?
It's an interesting area that we need to continue engaging with and watching, but there's no 3-second answer I can give you beyond that. Definitely look at it. That's my view.
Okay, and I have to ask you, you're based in London. I know that JP Morgan has been in Europe, the continent, for kind of, more than 200 years. Your European headquarters for, I think, the digital bank is in Berlin, if I understood correctly. Where if someone was going to set up a standalone digital bank tomorrow, where should they do it? London, Berlin, or Paris?
Love all of these places for different reasons, and Madrid and Milan as well. That each of those have some form of a fintech scene. And look, I mean, I don't want to take sides, because in a way it's something like which market do I know? Where do I have the network? Right? These kinds of considerations might dominate others from a kind of pure depth of ecosystem, availability of talent, availability of funding point of view. I do think London still has an edge, but I'm not going to fight to death over that claim.
Okay, Kuba. So look, it's time now for our round of rapid fire questions. Are you ready?
I hope.
Okay, so I've got 90 seconds on my phone's timer. We'll try and get as many as we can in as possible, and just 1-word answers is all I'm looking for. So away we go. What fintech segment, in your point of view, has the biggest potential over the next 5 years?
RegTech.
What is the biggest pain point in your everyday financial life that you would like to see resolved?
Long-term investing.
Are bank bosses ready for the AI revolution?
Absolutely.
Are consumers ready?
Partly.
Have regulators in the EU, UK and US kept pace with all the new possibilities and behaviours in the financial industry that we're now seeing?
Yes.
Have you ever personally invested in crypto?
No.
Are physical points of sales part of the future of finance?
For a while.
Are bank branches part of the future of finance? I know JP Morgan likes bank branches.
Same.
On a scale of 1 to 10, with 1 the lowest and 10 the highest, how likely do you think it is that in the next 10 years, one of the neobanks will be as profitable as a top-tier legacy bank? Out of 10.
3.
That central bank digital currencies, CBDCs, will become a mainstream reality in the US or the EU or the UK?
Oh, again, probability.
Yes.
3.
That you'll be able to open a crypto account at a top-tier bank?
5.
5. Okay, being quite parsimonious with your ratings there, Kuba. But I'm afraid that's the end of our round of rapid fire questions and about all we have time for our conversation. So I really want to thank you again for taking the time to speak to us today. Kuba Fast, the CEO of Chase UK. Thank you so much.
Well, thank you so much, Elliott. It was a great pleasure. A big fan of Paris Fintech Forum. So hope to see some of the folks watching this in Paris at some point.
Likewise. And for everyone watching, we will be back again next time with another big name from the world of finance and technology. We do hope you'll be able to join us again then. In the meantime, don't forget to subscribe to the Paris Fintech Forum YouTube channel and to follow us on X at Paris Fin Forum. That's all for now. See you next time. Bye-bye.